Hey my friend, welcome back to another video. Today in this video we're going to be going through my portfolio, kind of showing you guys my thoughts, some positions I have open, and yeah, kind of give you some ideas on what's going on in my head and my portfolio and how I've been making money selling options. Just a little disclaimer before we get started. This is not financial advice. I'm not a professional. I'm not responsible for any money you may lose, but I would like the credit if you do make some money. So here we have my Robinhood open. I use Robinhood for my brokerage. I love how easy it is to use. Very user-friendly, and yeah, I just love it. So let's go through my first position, Celsius Holdings. So with this position, I bought it, let's see, my cost basis. Okay, let's see here. Where's the cost basis? So my cost basis for Celsius is average cost $44.90. I basically bought it. This one I did not sell puts to get in. I actually just bought the shares and then I sold the call. So I believe that's called a buy right, where you basically just buy the shares and then you sell the call. I'm really bullish on it, and I thought I might miss out on some upside. So I didn't want to sell the puts to get in, just wanted to buy the shares and sell a call. So I have a $47 call, and that one expires actually on Friday. So that one, yeah, I'm gonna probably just try to keep on selling calls higher up and out and try to collect that upside and those juicy premiums. Next one, I have Rivian. I have a $14 call. This one I did before like the big beautiful bill got passed, and before the EV credits were known that it's going to be like taken away and all that stuff. So this one I just have one position, and yeah, I'm just a little cautious on the EV stuff anyway, especially Rivian, because they are losing money technically, but they're a beautiful car, and it seems like more people are buying them, and it seems like they're growing. But yeah, I try to stay away from companies that are not profitable. So I just have one share or one contract of Rivian, and it's a $14 call. So I'll probably just keep what I have and just continue to sell calls on it until they get called away. We'll see what happens. My next position is AMD. So AMD, I have a 155 call, and I actually also have a 157.5 call that I sold. But I bought them, these ones I also did a buy right, where I basically just bought the shares at an average cost. I have around 141.28. And then I just turned around and sold those calls. I sold 155 call for $725, and yeah, that one, if everything goes well, let's see. Oh no. So if it expires under 155, then I'll just keep that 500 bucks. If it expires basically at around 160, I basically break even because I'm selling it at 155 and I got paid around 500 bucks. Now with AMD, I'm actually super bullish on AMD. I think it's probably going to 200 plus. Maybe by the end of the year. I'm not sure. Short term, nobody can tell you with certainty anything, but it's definitely, in my opinion, going up long term, along with Nvidia as well, because we're basically entering this AI super cycle, and AMD has some really good chips coming out. The MI 350 and the MI 400, and yeah, they're going to do very well. Now, a lot of people think Nvidia is like the only dog in town when it comes to like the AI chips and all that stuff. But AMD, like their market cap is just so much lower, so they have so much more upside potential. They don't have to be the number one winner in AI like Nvidia will. If they're the number two, they're going to do very well over time, in my opinion. So I think AMD has a lot of upside potential. So I'll probably just keep rolling that up and out further as we go, if the price just keeps going up. So yeah, just collect income and get upside there. So TSLL, that's my next position I have here. I have 1050 puts. So TSLL is a leverage position on Tesla. So basically Tesla's a $300-ish stock. just to do one contract, that's going to be right around 300, or not 300, $30,000 just to do like one contract. So TSLL, what I like about it is, one, it's a lot cheaper. So the TSLL price, current price is $11.81. So basically, right around $1,100 it'll take to do a contract. This one, in my case, $10.50. It's $1,050. A lot cheaper. Two, it has higher implied volatility because it's a leveraged position. So Tesla, when Tesla moves up 1%, TSLL should move up 2%. It's a 2 times leverage. Same thing on the downside though. So if Tesla goes down 1%, TSLL goes down 2%. So there's more risk, more implied volatility, which gives better premiums. So that position, let's see, if I do simulate returns, in a perfect world, if it stays above 1050 by this Friday, I should get $500 total profit. Actually, it's by July 25th. But yeah, so that's actually really good. That's like just off the top of my head, it's like a 4 or 5% return. So that's really good, actually. And when I sold that, I think it was about a month out. So not too bad, not too shabby. Next position I have here is Dutch Bros Coffee. So Dutch Bros is a coffee chain. Every time you drive by, there's probably a line. I don't know if you see a Dutch Bros in your area. I think it has great management. I'm wanted to own the stock for a while, so we'll see what happens. I sold $60 put, and I sold the put when the stock was about $64. And this one I got paid $350, I believe. So if it stays above $60 by expiration, then I'm going to be able to keep that juicy $350 sitting on my butt doing nothing. Now, if it goes down below $60, I'm going to be forced to buy the shares at 60. But that's only if it expires on expiration, which is, in my case, August 15th. So it has to expire below $60 by that date, and I'll be forced to buy the shares, which is fine. I want to own the shares. It's a good company, good management. I believe they're trying to get to about 4,000 locations by 2030 or 2035. So yeah, their earnings calls are always really good. They're growing. Love the management team. Some exciting stuff. Let's see. The next one I have here is SoFi. So SoFi is a digital bank. They basically do banking better. They're digital first. They have they're basically like this super app where basically you could like track your net worth because you have like all your accounts linked to SoFi. You could do like student loans, credit cards, debit cards, like just, I mean, picture that. When was the last time you've been to a bank, like a physical bank? Like you don't really need to that much. So digital is definitely the way to go. But what makes them really special is they actually are very capital light with their business. A lot of the loans that they do, they really only go for like higher credit people and people who have higher incomes. And then for people that don't meet their like credit requirement or their income requirement, they actually pass those loans off. They basically underwrite the loans, and then they're a partner with other people who loan out the money, and they basically get a fee. So they basically just get money for doing that loan, and they pass it off, so they're not holding that risk on their balance sheet, which is really, really bullish, really good. And Anthony Noto is just a G. He's just super good, really good leadership, and really like the way he speaks about the business, and just him as a leader, he's just doing a phenomenal job. And when you invest in companies, you know, you got to bet on leaders and bet on management. So yeah, let's see here. So I basically have a $23 call on I have 6 contracts, $23 call that expire August 15th. A lot of my positions are actually through the earnings. Yeah, it's a little more risky to sell positions through earnings because there's a lot more volatility. So there's a lot higher chance that the stock goes down, a lot higher chance that the stock goes up. It just depends. So there's a lot more volatility, which is basically a little bit more risk. So, but yeah, so SoFi is really bullish in my opinion. We'll see if it blows past my $23 strike, then I'll probably roll it higher. I have total 900 shares basically. So I have 300 shares or 3 contracts worth that are not sold. So I just want to let those ride and maybe sell calls at a later date at a higher price if it goes higher. And yeah, this one I was very hesitant to actually sell calls on SoFi because they're just so bullish in my opinion. But the stock rose so much, and just want to get some of that income. So we'll see what happens. But you can always, with selling options, there's always a bit of a margin for error. So there is some optionality, pun intended, with options. So you can roll. You can always just cut your, basically when you sell calls, you never really lose money if it's above your strike price, unless the stock goes down, but then it's a stock that you would have just held anyway. So you really just only leave money on the table. So if it blows past and goes to $30, that's gonna suck. But I'm still making money. Like my cost basis for SoFi is $13.94. So it's basically a win-win situation. The only time you really lose is if you leave money on the table, which kind of sucks, but that's just the cost of business at the end of the day. Oh, I feel a sneeze coming on. All right, bless me. And then the last position I want to talk about is Elf Beauty. So I have a Elf contract. I sold a 105 put. For the expiration date is August 15th. Do I have another sneeze? Bless me. So I sold this 105 put for August 15th. I sold it when the stock was about 117-ish. So yeah, basically like that downside, basically I'm good. Like until it hits 105, like I'm gonna be in profit. I'm gonna keep all that money. Let's see if I do my where is it? 105 put. I was looking for the simulate my return button, but it's not showing. Oh, there it is. That was interesting. So simulate my return. If it stays above 105, I get to keep the full $615, which that's actually about a 6% return on my money. And again, that's going through the earnings. So I'm actually really bullish on Elf. I think they're about to close a deal called Road. They're buying for, I think, like $1 billion. I think it's a really good deal for the company actually, because after the earnings, it shot up on that news. So yeah, they're basically acquiring Road. I believe that was Hailey Bieber's company. Not quite sure off the top of my head, but I believe so. And yeah, so it's supposed to be a really good deal actually for the company. And Elf is just a great company, great management. Their product is on the lower end price-wise. So I believe on their last earnings call, they said that they're going to actually raise all the prices of their product by $1, kind of to hedge against that hedge against the tariff risk, which I think just from my own research and what I've been hearing, like the tariffs, they're not as bad as everybody anticipated and everybody thought. So that could mean like high margins, higher revenues, basically not as much risk. So that could be really bullish for this earnings, but then there could also be some short-term stuff because of the new acquisition. So we'll see what happens with that. But I would love to own more shares. I think it's probably going to 200 plus long-term. I think it's a great company. And yeah, let me know if you wear Elf Beauty or if you know someone who does. Let's see. And then, yeah, so I got paid $615. So my true break-even price on Elf is $98.85, which means it can go all the way down to $98.85. And that's basically my break-even price. So basically, I went from 117, which is what the stock was at when I sold the option, to now it's like me buying it at $98. So I basically hedged almost a $20 downside risk. Or I could have just bought the shares at 117 and now I would have been down like $800, $900. So that's why selling options is great. It's like, it's just like your hedge against the downside is like really buffered. So you get a lot less volatility on the downside. Sometimes you might leave upside on the table, let's say, but for the level of risk, options is like my favorite thing I've ever done so far. Not buying options, selling options. Selling puts, selling covered calls. It's mamma mia. So, guys, that's basically my portfolio in a nutshell, what I have right now. I'm going to try to show up more for you guys and try to make videos on a more consistent basis. I think I've been kind of just like overthinking the production, overthinking the editing, and I basically just want to be more candid and just straight to the camera, and just try to give valuable information that's going to hopefully make you guys some money. Yeah. So that's basically it. Also, I'm gonna have. I'm actually just starting I'm starting a school community. So I want the school community to be basically a community where we can all lift each other up, motivate each other, share option plays, share ways we're making money, maybe not even having to do with options. Just want to form a community that we can all build wealth together, lift each other up, and motivate each other, and yeah, basically have a community of people that are like-minded. There's really not a lot of people in your local area that probably are into this kind of thing, at least for me. Like, there's not a lot of people I can nerd out about with options and stocks, and you might be feeling the same way. So I think it'd be great to have this community. There's a ton of other communities out there, but no one's going to do it like we are, so it's going to be a unique experience. Right now, it's actually going to be free to join. So join with the link down below in the description. It's going to be free to join. My goal is that we can do, at least starting off, weekly calls and have like kind of open dialogue discussion. I'm going to be in there, chatting and answering questions if you have any. So it'll be free now, and the idea is later on, it'll be a paid community, but the people that are in now that are going to kickstart the community, they're going to be grandfathered in. Oh, there's a ladybug. They're going to be grandfathered in, and then eventually it will be a paid community. It's not going to be like an outrageous amount. It's going to be really good value for your money. So, yeah, that's basically it. Just want to deliver value first, not trying to rip off anybody. Just like, it'll be a no-brainer once it is paid, but for right now, it's going to be a free community that you can join. So, yeah, please join with the link, and hopefully we can lift each other up and make some money together. Once again, this is not financial advice. I'm not a professional. I'm not a guru, right? Yeah, so just, do your money is, your own risk, and I'm not responsible for that. But use your the full facets of your brain and your knowledge and your wisdom and your information and YouTube to make good decisions. I really don't want you guys to lose money, especially if it's something that like I'm doing. So really do your own research with that. But yeah, in my experience so far, I've been making good money doing this. So that's where the passion comes from, and I'm really excited to keep doing this. My goal, I'm basically like, I'm not like these other YouTubers. Like, I'm not like super, I'm not just like, I don't know. I'm not fake with it. I'm not also just like charging for a course and then, making most of my money, some other way. Like, I'm doing really good with the options, but I also have a job. So right now I'm actually in between working. So I worked in the morning, and now I work in the evening. So I had like a chunk of time where I said, hey, you know what? I'll make a video. So yeah, I'm a normal guy, and yeah, just trying to make some money and trying to help others along the way. So anyway, join the community in the link down below. And yeah, I hope you got some value out of this, seeing my positions, and yeah, let's make some money.